Okay, good afternoon, everyone. Thank you so much for joining us today. This is Chad Robbins with World Cup Advisor. We are lucky enough to have Daniele Sambataro with us today, one of our featured World Cup advisors and top contender in the 2023 World Cup Trading Championships. If anyone has questions during the presentation today, feel free to put them in the question box. If not, no worries at all. We'll be monitoring that box. If it's appropriate to address your question during the presentation, we will do our best to do so. If not, we'll try to hold off till the end to go through those. In just a moment here, we'll bring on Daniele. And once he is done with his portion of the presentation, I'll jump back on and explain the World Cup Advisor leader follower auto trade trading service and your opportunity to follow along if you would like to. Daniele, are you with us, sir? You have us muted.
Hi, can you hear me? For the introduction, Chad, and thank you for all the attendees for coming along to hear me talk about my trading approach. To do that, I will describe the momentum selection program, which is the result of all the research I've been making for the last 6 years. So, the momentum selection program consists of a rotative portfolio of trading systems, which change its composition at the beginning of each month. Uh, an automated trading system is just a set of rules for both entries and exits to and from the market that, after being coded, can automatically execute the orders. So the backbone of the program is represented by automated trading systems. There are not any discretionary operations or trades made on news or on the basis of my personal view of the market. But why I use automated trading system instead of manual trading? For me, the main advantage consists in first, the possibility to backtest and optimize a trading idea. So at least we know that what we are going to do has worked in the past. And the second, it allows us to trade more markets with more trading system at the same time. And it gives us a huge advantage in terms of diversification. My first approach to trading systems dates back to 2050 when, after obtaining my master's degree in economics and finance, I joined a team of programmers as a neural network developer for market price prediction. So I probably started with the most complicated way to approach the market, and it was very useful because there I realized that the market is inefficient and that it's possible to exploit some of this inefficiency to try making profits. At the same time, I realized that the use of black box or complicated models can be very dangerous because you have to deal strongly with overfitting, which is the main enemy of algorithmic traders. And also, in most of the cases, you don't really know what the black box or system does. And it's very difficult, from my point of view, to put money in something you don't know what it really does. Uh, because of these issues, I started using a more intuitive approach for exploiting the inefficiency of the market and creating the methodology on which the momentum selection program is based. So I'm a financial trader, not a data miner. So any trading system I create is not the result of a brute force search. It simply consists of a set of rules based on first common sense. So I exclude any weird conditions, even if it give a good result in backtest. Just to give you an example, it doesn't make any sense to go long on an instrument because the session of 20 days ago was positive. I saw that because sometimes you find good results using weird condition, but you should not be fooled by the results because I think that they are just the result of a brute force search, and the probability of having the same result in the future is very low. Second, I should follow the you should follow the peculiarity of the market. Each market is different, so you need to consider these differences when you want to create a trading system. Using this approach from 2017 until today, I created about 250 trading systems, which have at least a 1 year period of out of sample results. I always wait to see how a trading system behaves on data not used for its creation before considering to use it. So basically, my trading systems can be mean reverting. So they enter a position assuming that the price will go back to its average value. So they buy after the price has dropped and sell after the price has risen. On the contrary, a trend following system assume that after the price takes a direction, it will continue keeping this direction. So this kind of systems buy after the price has risen and sell after the price has dropped. The third approach I use to find inefficiency consists in the use of patterns. So the system will buy or sell after a certain price configuration appears in the market. Here we have just an example from literature. I use my own patterns for create trading system. So consider that for any of this kind of logic, there are hundreds of possibility to create a trading system. In fact, there are hundreds of ways to say that the market has dropped. You can require that the price of, I don't know, a 5 minutes bar is below the low of the previous session or below of the price of 6 hours ago. You have a lot of possibility with just these three kind of trading system. This is the disclaimer. Okay, here we have a visual example of trading system. It's just a back test. It's on SP 500 futures, and as you can see on the left side, it sell short after the price crosses above the high of the previous session. And on the right side, we have another trade, the dotted line, which buys after the price cross below the low of the previous session. Both the position close during the night session. Uh, so this is, I mean, reverting trading system. And of course, there are some conditions that select the best moments to enter. These conditions are often based on volatility or directionality of the current session or of the previous session. Now, let's see which kind of result we can obtain approaching the market with this simple strategy on the data we have, so on the past data. Okay, well, this is the backtest of the strategy. On the right side, we have the equity curve, which is the cumulative sum of profits and losses, and describe the progress of an hypothetical account which use this trading system. The money result is shown in absolute value, and the backtest simulate to buy or sell a single contract. So we don't increase the position size according to the hypothetical increment of the capital. Uh, on the left side, we can see the main metrics of this trading system. Here I have point out the ones that I think are the most important. First, of course, the net profit, the circle number one is important, but you have to look at that in relation with the drawdown, which is inside circle number 5. In this case, we have 194,000 profit against 12,500 drawdown. So we have a profit on drawdown ratio bigger than 50, which is a very good result, and you can also appreciate it just looking at the equity curve. Of course, this is not enough to judge a trading system because we need to cover the cost we face each time we make a trade. In this case, we have an average trade, circle number 3, of $218, which is more than enough to cover the commissions. Last, not last, after I look at after I also look at the percent of time in the market, which is indicated in circle number 4. I prefer to have a low percentage like this, which is about 10%. I hope you can see it, because I want to stay in the market as little time as possible. In fact, less time we stay in the market and less will be the risk. This is just something intuitive. The last metric I want to discuss is the profit factor, which is given by the ratio between gross profit and gross loss. It gives you an idea on average of how much money you do have to risk for having a given expected profit. In this case, the value of 1.83 means that on average in the past, for having an 83-cent profit, you had a loss of $1 and a gain of $1.83. This is very important because it makes you realize that this nice equity curve contains losses, which could not be covered by profit in the short term. So you need to be aware of it and have a proper mindset for facing the inevitable bad periods. This will help will help to follow the plan and get better result in the long term. All the type of trading system I mentioned before are applied to the most variety of markets. In the program, I trade index micro futures, metals, energy, and grains futures. So I try to diversify as much as possible in terms of type of system and in terms of market. To conclude on this part on trading system, here I summarize all the other characteristics of my systems, and in particular, there is always a time exit along with a stop loss and a take profit. So we know before we enter which is the maximum risk, the maximum profit, and the maximum time we will stay in the market with each trading system. The average trade in the market, the average time in the market can vary from a few hours to few days. Anyway, most of the trading systems exit at the end of the session, so they are intraday. I also use trading system that can be very fast and can make till 200 trades per year, but there are also more selective trading systems that enter about 2 times per month. The average trade is always more than enough to cover commissions. This is very important, and starts from $180 and in some cases can arrive at $400 per trade on the big contract, because the backtest are made on big contract. Last, the percent profitable is very variable, like can be from 35 to 70%. Anyway, when we will look at the portfolio, we don't care about this value, because we will think globally as a portfolio. So far we have talked about trading systems, which are the bricks of the methodology I use. Anyway, when you have a so big amount of trading systems, you can trade them all, and you need a method for combining them in a portfolio. Before talking about the method, let's see which are the advantage we can obtain creating a portfolio. Uh, the first advantage for me consists in diversification. So we want to trade as much trading system as possible in different markets according to our capital, of course. A portfolio also improve the return on drawdown ratio, but to do that, we need to use trading system that have different logic and trades different markets. So basically, we want that when a trading system tends to work bad, there are other trading systems that work good. In this way, we try to avoid to use trading system with overlapping drawdown periods. Another advantage we can obtain using a well-designed portfolio is the fast convergence of real result to the expected one. It happens because we can make more operations in a given time period. So increasing the sample, we make faster the convergence. This is a statistical concept, but I think is also very intuitive. I mean, if we think we have an advantage playing a game, we want to play as much as possible games. So keeping in mind the advantage we want to obtain from our portfolio, we have hundreds of ways to select which trading system to include in the portfolio. Of course, we exclude the possibility to use only the best one or two trading systems, because we wouldn't have any of the advantage I mentioned before. So we need a more complex approach. The one I use is based on two desirable characteristics. I want first fast reaction to actual market conditions. So I rebalance the portfolio on a monthly basis. And I also want low dependency of results between trading system. So I use daily and weekly correlation for selecting the trading systems to include. So let's see my approach in more details. On the first weekend of each month, I change the composition of the portfolio following the steps in this diagram. All the process is performed by a proprietary software, and it's fully automated. First of all, I define the risk parameters. So according to the capital I have in the account and according to my risk aversion, I choose the value of maximum acceptable stop loss, drawdown, and also the maximum value of the correlation of each trading system I want to include in the portfolio. After this, I perform what I call momentum selection. So I exclude any trading system that shows negative performance in the last 3, 6, or 12 months. In this way, I keep only the trading system having a strong momentum, both in medium and in the short term. Then next step, I make a selection based on risk, and I exclude any trading system having a stop loss and a drawdown bigger than the maximum I chosen in the first step. After this, I um, all the remaining systems meet the performance and risk profile we require. Anyway, we don't want to trade all of them. In the next two steps, we aim to leave out all the trading systems having performance too correlated with the ones of a better system. So I order all the remaining trading systems according to the profit on drawdown ratio calculated on the last 3-month equity curve. If the system made fewer than 15 trades in the last 3 months, I consider a longer period with the most recent 15 trades. So after the ranking process is completed, I'm ready to pick the systems that will be part of the portfolio. So I pick the first ranked system and I add it to the portfolio, assigning a number of contract so that the stop loss and max drawdown limit are respected. Following the ranking order, I look at each system and I check the correlation coefficient with all the system I have already added to the portfolio. And if the correlation coefficient is lower than the value I choose in step 1, I add the system to the portfolio. If it's bigger, I exclude the system for just for that month. Together with the correlation check, I also make a maximum margin required check, and in case the total margin required for the operativity is bigger than the account capital, I stop the selection process. Last step, I have my final portfolio, but I have to check the drawdown. If the drawdown of the portfolio obtained after step 5 is less than the one I choose prior, I end the process and take the final portfolio. Instead, if the drawdown is bigger, I use the maximum correlation value to adjust the number of systems. So I decrease the value of max correlation and redo step 5 until I get a max drawdown lower than the one I choose prior. Now I think it's important in all this step to point out that all the portfolio creation process is based on risk. I I didn't speak about profit. I start from risk to take any decision. I said I can risk X, and I made all the decisions according to that. This is for me the very important, the most important thing. So some final consideration. Trading is not easy. It requires a good mindset, a good knowledge of the market, from which come the best trading ideas. It also requires a good risk management skills and, in the case of automated trading, a good ability to write code. So from my point of view, the best thing you can do is to use a method for first finding what has worked in the past. even if the past results are not indicative of future results, it remains a reasonable starting point to build a method on. Of course, you don't want to create a method starting from something that has never worked in the past. After, a very important thing is testing for robustness. I mean that any choice we make must give similar results if we slightly change the parameters. So, for example, in the system on yes futures that I showed you before, I require in the development phase, I require that that if I slightly change the enter level, the result remain positive. Or, for example, I require that if I perform the portfolio calculation on the second week of the month instead of the first week, the backtest results are similar. So after testing for robustness, you need to measuring risk and setting real expectation. Okay, here I want to make clear one thing. I I have talked about risk, real results, expectation. All these are words that are needed for creating a framework to work with. But you should never forget that when we talk about investing in the market, we always have to deal with uncertainty. So the positive belief we can have are all about the effort and eventually the good job we have made to create a method to stay in the market. But even the best method cannot eliminate uncertainty. So keeping in mind all this thing, a final step is just go live, follow the plan. This is what I've been doing for almost 6 years now, and I'm happy with these results. Thank you everyone for the attention. If there are any questions, I'll be happy to answer in the final part. Thank you.
Perfect. Thank you so much, Daniele. Thank you for sharing your process with us and your approach to the markets. Thank you, everyone, for your attention with Daniele's presentation. I'm just going to briefly explain the World Cup Advisor service that we offer with Daniele. Really, our business model was built on these two main pillars: the World Cup Trading Championships, which is a real money trading competition, the longest running in the world. Daniele is currently a top contender in the 2023 competition. That's how we discovered his talent so far. So we do offer the leader follower auto trade trading service at worldcupadvisor.com. What we offer is quite literally to link anyone's account to Daniele's, in that when he places a trade in his own account, all the followers automatically and simultaneously get the same exact trades. This diagram will illustrate this very well. So you have the advisor on the left side there. They can be located anywhere in the world. Daniele's trading from Sicily. When he trades his own account, we automatically intercept his order and redeploy it to the market that allows for an average price fill for all the followers, including Daniele's account. So there is no difference between what he's getting in his own account and what all the followers get in their accounts. All that data gets driven to the World Cup Advisor website at the same time as well. So as a follower, if you would like, you can log in to the site during trading hours or anytime, but you'll be able to see Daniele's orders as well as open positions. I'll show you what that looks like. As a follower of his program, of the Momentum Selection Program, or as a guest member, you're able to view all of the trades from any of the World Cup Advisor programs. You can list them all on one long sheet using our no paging option that will allow you to copy and paste it into Excel or any program that you wanted to use for analysis. But in addition to the closed positions, as a follower of the program, you'll also be able to see the open positions that are moving with the market. Now, you don't have to log in and view the open positions, but you certainly are able to, and you keep up with the program during the day. Now, as I mentioned, you do not need to log in. You do not need to keep track of the open positions. A lot of clients just rely on their daily statement to keep track of their account. So you certainly don't need to be engaged during the day. If you don't want to, if you're not able to, you can simply rely on your statement that you would normally get from your clearing firm. Now, I know if you are interested in perhaps following Daniele's program, we do a full bio page for him on his profile. You can learn more about his education and his background and his approach to the markets in a bit more detail. In addition to the bio page, there's also a specifications page. This is going to answer a lot of questions that many of you will have, like what markets is he trading? How long has he been using the momentum selection program in the World Cup Trading Championships, as well as what types of markets, or excuse me, what type of orders he uses to get in and out of the market, as well as more details that you'll want to go through there. Now, I did also want to mention there is a monthly subscription fee that is charged for each follower on these programs. That is how the advisors make money on our model at World Cup Advisor. Now, that is a flat monthly fee, and that is also part of the performance. So if you're reviewing a performance report or perhaps on an email, it's always net after all the costs and fees, including the monthly subscription fee, has been deducted. That's really the service. And briefly, if you do have questions for myself or for Daniele, please feel free to put them in the chat box. I do know I do have some questions for Daniele, if you're available to go through a few more.
Of course.
Daniele, I wanted to ask you, I know you went through your systems in detail. Can you tell us a bit more on how many systems you're deploying on average on a monthly basis?
Oh, yeah, of course. The number of systems usually can vary from 6 to 8. Just for example, at the moment, there are 7 active systems applied on 6 different futures. So I cover all the energy, the index, the grains, and the metals sector in this moment. But of course, at the beginning of each month, this composition will change.
Sure. So do you ever override any of the systems and perhaps stop a system intra-month or add a system intra-month? What's your process like in that regard?
Okay. Usually I don't override the systems, but it can happen when I want to reduce the risk in a very particular circumstance. So, for example, I decide to not hold short positions over weekend on with future in this specific period because the gap up risk over weekend is too high. So I could close the position on Friday to reopen it on Monday. Anyway, in general, any manual action is made for reducing risk, not for trying to increase profit. About the intra-month activity, I never had systems intra-month for the same principle of reducing risk in some specific circumstance. I can remove systems. I remember the only time I discretionary removed some systems was in March 2020 after lockdown. I remember I removed all the mean reverting trading system on indexes. And maybe another scenario in which I can remove a system intra-month is if the system reach an intra-month drawdown bigger than the historical one.
Wow, it's interesting. Thank you for sharing those examples. I wanted to address following momentum selection. If anyone's interested in doing that, World Cup Advisor does have many different brokerage relationships. It is certainly possible that we could use your current one and set you up with a new account number to follow Daniele's momentum selection program. If you do not have a futures account already, of course, we can help you establish a new one in order to do so. I do have the contact info posted for World Cup Advisor. If anyone has questions or would like to receive more information on Auto Trade Trading Service or Daniele Sambataro's momentum selection program, please reach out to us. We'd be happy to help you. To the attendees, thank you for joining us today. Had a nice audience. And Daniele, thank you for staying up late and presenting momentum selection and everything today. That was very interesting. And we did record it. We will get it out to everyone that would like a recording as well. So thank you again, Daniele, and to our attendees.
Thank you. Thank you.